what zero represents is Joe Biden's understanding of the U.S. economy, because he has no clue what's going on. You can't brag about the fact that we had one lone month where high prices didn't get any higher. It's not like they went down, they just didn't go up. But if people were struggling with high prices, their struggle didn't get any easier, it remained the same. What would have been good is if prices could have come down, but they didn't come down. And in fact, the only reason that the headline number didn't go up was because we finally got some relief at the pump. Gas prices came down, but a lot of other prices, food prices keep going up, rents keep going up. We are nowhere near done with this inflation problem. It is going to be here for years and years and years, probably the remainder of this decade, and probably then some. As they keep telling us, this is a very unique recession. In fact, most people don't even want to admit that we have one. But look at the recessions of the 1970s. You had rising prices there during stagflation, and that's what my forecast is. Remember, last year, I was predicting the U.S. economy would be in recession in the first half of 2022, and very few people had that right. But I also predicted that inflation wasn't transitory, that it would get stronger as the economy got weaker, and that is exactly what happened. Now, the reason that I believe that inflation is going to kick into a higher gear as this recession that we are in gets worse is because I believe Powell is going to pivot ultimately, and he is going to give up his fight against inflation in order to fight a different foe, and that is going to be a recession and rising unemployment and potentially a financial crisis, either one that has already happened or one that is rapidly approaching. And so I think Powell is going to choose what he believes to be the lesser of the two evils, and I think he's going to pick fighting recession and propping up financial markets and monetizing government debt so the Treasury doesn't have to default. I think the Fed is going to pick that over inflation. And so unlike the pivot that we got with Volcker back in 1982, where Volcker pivoted after a victory in his fight against inflation, Powell is going to pivot despite defeat. Inflation is going to win. And so when we go back to 0% interest rates or whatever we do, and when we go to QE5, which is going to be launched, I don't think the Fed is going to shrink its balance sheet very much. It's going to shrink it less than it did last time it tried to do it, which is an impossible task given the bubble it's inflated. I think when the Fed goes back to stimulus and creating inflation, when inflation is maybe double or triple or quadruple that 2% target, the markets are going to react very differently than how they reacted in the past. Because in the past, the Fed was able to justify all this cheap money because they said we don't have enough inflation. We're still below target. Well, when they go back to this stimulus, when inflation is triple or more their target, the markets aren't going to buy it. And so I think all the inflation that they are going to have to create in order to stimulate the economy out of this recession is going to ignite a powder keg. We already have an inflation problem, and Powell's going to pour all this gasoline on it. And so we're going to see inflation moving up to a much higher level, even though it's already very high. In fact, it's probably double what the government claims in the CPI. If you want to know what's actually happening to prices, you've got to double what the government tells you, and that's more accurate. Meanwhile, labor force participation last month fell to 62.1. That is the low for the year. And in fact, over the last 4 months, even though we've created all these jobs, the number of people in the workforce has gone down. And so that means that all the jobs that were created over the last 4 months were people who already had a job getting another job. You know, Biden claimed that we have a record number of people in the workforce. He was mistaken. We had more people working 4 months ago than we have working now. The record high for the number of people working is before the pandemic. So even though we've recovered the jobs that we lost prior to the pandemic, it's only because the same people have multiple jobs. We haven't recovered the workers. We still have a lot of workers that were working prior to the pandemic that haven't rejoined the labor force. We can't have a soft landing because a soft landing means we avoid recession. So by that definition, we've already crashed, or it's a hard landing. It is what it is. And so you have all these Keynesians that somehow believe that inflation is caused by economic growth. They also think it's caused by too many people working. They think there's a trade-off between unemployment and inflation. They think if there's not enough people unemployed, you're going to have more inflation, and the way to get rid of inflation is to put people out of work. All of this is Keynesian nonsense. Inflation is not caused by the private sector. It's not caused by growth. It's not caused by people working. The only people working that cause inflation are the people at the Fed who are running the printing presses or pushing all the buttons that are creating all the money. That's where inflation comes from. And they create inflation in order to monetize U.S. government debt. So the federal government runs a big budget deficit. The Federal Reserve prints up money to buy those bonds, and that inflation enters the economy. It's got nothing to do with growth or people working. As a matter of fact, in a real economy, the stronger the growth, the lower prices.
Do you find yourself with a substantial amount of cash that's currently idle and not generating returns? It's high time you explore the trading app I've recently started using, Moomoo. It now offers an impressive 5.1% APY, plus an extra 3% APY for your uninvested cash. You have to know that 8.1% APY is 17 times the national average savings account interest rate, and there's no minimum deposit limit for cash sweeps. This is one of the highest interest rates I know of. Why I love Moomoo is it stands out by offering zero commissions and no platform fees for stocks, options, and ETFs. It's packed with powerful market analysis features for absolutely free. For example, now is the U.S. stock market earnings season. Financial data, analyst ratings, earnings calendar, and more are all free to use. The 6.8% margin rate is one of the lowest I've come across. You can tap into pro-level tools and information absolutely free. Sign up using my link below and grab up to 15 free stocks and park your idle funds on Moomoo for a sweet 5.1% APY plus 3% APY extra. Or earn up to $5,000 in cash rewards when you transfer assets to Moomoo.
Because what is economic growth? It means increased output. It means more goods and services are being produced. Well, if you increase the supply of something, then you decrease the price. So a productive economy that's producing more stuff means that the price of that stuff is lower. The same thing with people working. If more people are employed productively, their productive output is increasing the supply of goods and services, keeping the prices down. If you slow down real economic growth, if you force people out of work, you're going to have less supply. We're not going to make as much stuff. We're not going to be offering as many services. And so therefore, the prices of those goods and services, all else being equal, are going to go up. Supply creates demand. So if people are producing and putting goods and services into the economy, well, now they have the ability to share in that production. They've earned money helping to create stuff, and now they can spend that money to buy the stuff that they created. And so the demand that comes from real production doesn't cause prices to go up. The only kind of demand that causes prices to go up is when the government just prints money and gives it to people. And so that money is not a function of production. People didn't earn that money producing. They just were sent the money by the government. I mean, that's what happened during COVID to a huge degree. You had people who had jobs and were working to help make stuff. They went home. They weren't working at all. They weren't making anything. But now the government sent them money. They weren't earning money because they worked. They were being paid not to work. But the worst part about it was many people were paid 2 or 3 times not to work than what they earned when they were working. So now these people who weren't working at all had all this money to go and buy stuff, but they didn't help produce any stuff. That's what pushed up prices, because you had all this fake demand and no supply. You see, the proper monetary policy response to the pandemic, if everybody was going to stop working, the Fed should have shrunk the money supply, not expanded it. The U.S. government should have cut spending, not spent more. That would have balanced out supply and demand. But instead, we had the worst combination of monetary and fiscal policy probably in the history of the country. In the face of collapsing supply, we flooded the economy with phony demand. And so we're experiencing now, I think, just the beginning of those consequences. We've got a long way to go, which is why the idea that inflation has peaked is nonsense. Historically, whenever they brand a piece of legislation, whatever the name is, the effect will be the opposite of that name. So if a bill is called the Inflation Reduction Act, then you know right off the bat, the effect of the bill is going to be to increase inflation. And that's exactly what it's going to do. First of all, there's all this new government spending. That's more demand, artificial demand, coming into the economy. How is the government going to get all this money that it's going to spend? Because it's not going to get it from those tax hikes. It's ultimately going to get it from the Fed. The Fed is going to have to print more money to monetize those debts. Now, even if the Fed doesn't do that and the government has to find private buyers for those bonds, well, then it's going to crowd out investment in the private sector. And so that's going to mean fewer things are going to be produced because the private sector is going to have less money to invest in capital and things to improve productivity. And so that ultimately causes prices to be higher. So will the increase in corporate taxes, because to the extent that corporations have to pay higher taxes, it comes at the expense of lower investment. So if corporations have less money to invest in plant and equipment and expanding supply, that ultimately puts upward pressure on prices. What the government needs to do to reduce inflation is reduce government spending. We need a bill that cuts government spending. The government is doing the opposite. They are increasing government spending. So what they're doing is they are throwing gasoline on a fire that's already burning hot. The government makes everything more expensive. It's the free market that makes things less expensive. So if we want to help put downward pressure on prices, we got to get government out and let the free market in. Now, in fact, they may be cutting interest rates before the end of this year, but it's not going to be because they've won a victory over inflation. It's going to be because the economy is in a much more severe recession than the one it's in right now. In other words, this recession that's here is going to get worse, and that's going to force politicians to try to do something. You know, once the political pressure is greater because of unemployment and the economy, then the Fed is going to switch its attention from inflation. But the inflation problem is not going to go away. It's just that this other problem is going to loom larger in the eyes of the Fed. And I think what's driving the markets is this bad news on the economy is good news for the markets, because it means the Fed will pivot sooner. And before it pivots, it will raise rates less than it might have raised, absent the bad economic news. And again, you still have all of these Keynesians out there that think bad economic news is good news on inflation. They think the weak economy will weaken inflation. It won't. It is going to strengthen inflation, especially when the Federal Reserve and the government respond to the weakening economy with more stimulus, because that stimulus is inflation. So they're going to start creating more inflation, even though we already have too much inflation. And so the problem is going to get much bigger than the markets understand. I still think this is an overall bear market. I think that rate hikes are going to continue to take their toll, but so will inflation. I think inflation is going to harm a lot of companies that have a problem dealing with it. I think a lot of demand is going to be destroyed for a lot of discretionary items, because people are going to spend all their money on food, on energy, on insurance, on rent, on taxes. Well, I think the nature of this financial crisis is going to be a lot different than the one we had in 2008, because I don't think the Fed is going to allow it. That's one of the reasons I believe that Powell is going to pivot, because if the Fed does keep raising rates, we will have a financial crisis that looks like 2008, only much worse, because 2008 was about bad debt. It was about people borrowed money and they couldn't pay it back, and the collateral for the loans was no good because it was real estate and prices went down. Well, we have much more debt now than we had in 2008. I mean, by an order of magnitude. Everybody has more debt than they had back then. And so this is going to be a much bigger crisis when the defaults start. And all those banks that were too big to fail, that were bailed out in 2008, they're a lot bigger now. And when they fail, it's going to be a lot worse, except with inflation too high and the Fed fighting inflation, there are no bailouts. There's no TARP 2.0. All these banks are going to have to be allowed to fail. And that means customers are going to lose money, not just stockholders or bondholders. The customers are going to lose money because the FDIC doesn't have any money unless it gets it from the Fed. And the Fed isn't going to be giving out money if it's fighting inflation. It's taking away money. So I believe the Fed is going to pivot to prevent that massive financial crisis. And so what we're going to get is a sovereign debt crisis and a US dollar crisis. So it's going to take the form of a crashing dollar. And so the people who are going to lose money are not the people that are just holding subprime mortgages, but the people who are holding US Treasury bonds or any bonds denominated in US dollars, or even people that have US dollars stuffed under their mattress. You know, the dollar has risen so far in the early stages of this big inflation because investors are still delusional about the Fed's ability to contain inflation and bring it back down to 2%. When they wake up to reality that inflation is going to be way above 2% indefinitely, then the dollar is going to fall through the floor, and then things like gold and silver will go through the roof. Remember, in 1971, the U.S. defaulted on its obligations because Nixon took us off the gold standard. But prior to that, if you owned a Federal Reserve note and you were a foreign central bank, you owned an obligation of the United States government to pay you gold. Federal Reserve notes were notes for gold. And the U.S. government defaulted on those notes. We told all of our international creditors, we promised to pay you gold. If you had $35, we promised you an ounce of gold. And they did a couple of devaluations first, but that wasn't enough. And then Nixon said, you know what? We're going to default completely. We're going to give you no note gold for your notes. We're going to pay nothing. So that was an official default. And then gold went from $35 an ounce up to $850. So people who had U.S. Federal Reserve notes thought they were going to get a certain amount of gold. They ended up getting a fraction of that gold because the value of the dollar imploded relative to gold because we defaulted on that promise. And I think it's going to lose its status as the reserve currency. And that is going to be a game changer for the U.S. economy because we rely on the ability to exchange the paper we print, U.S. Federal Reserve notes, dollars, for the goods the rest of the world produces. We don't have to produce goods in exchange. And that's been the free ride that we've had on this global gravy train. And that's going to come to an end. And that's going to have profound implications for the U.S. economy and the standard of living of America.
Sign up using my link below and grab up to 15 free stocks and park your idle funds on Moomoo for a sweet 5.1% APY plus 3% APY extra. Or earn up to $5,000 in cash rewards when you transfer assets to Moomoo. Assets to Moomoo. Assets.
Middle America is getting destroyed in America today. It's a very different economy. Inflation isn't moving.
It will hit $5 in less than a week.
Brace for impact. High gas prices around the corner for you. America is going to be very, very upset the next few months. Jerome Powell says Fed will wait to cut rates, and that is not good for a lot of people that were hoping to get rates being cut. Oil, direct Iran-Israel war could spike oil. Ready? $30 to $40, which means if you're paying in California right now $5.50 a gallon, you'll be soon at $8 a gallon if it goes up 50%. The U.S. freight recession keeps getting deeper. The average American doesn't know what a 401k is. The Federal Reserve will not be making rate cut.
12-month core PCE inflation, which is one of the most important things we look at, is estimated to have been little changed at 2.8%, and the 3- and 6-month measures of inflation are actually above that level. So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy.
What does that mean to the average person?
You can already see it at the gas pump because oil is 85. So the average person is like, well, I heard oil is 85. What that mean? It means the gas pump's going on. And thank goodness we're going into summer, not winter, because heating oil would be way up for people that are in the Northeast. If you bought a house maybe last year, squeezed into something at 7%, mortgage rates are still 7%. They're probably only heading back to 6 3/8 or 6.5 by the end of this year because they're talking about only cutting twice. It means the economy is not improving as much as the headlines say. That inflation is stubborn. It's still here. People are still seeing it up. And if you're thinking of buying a house and you're thinking those interest rates are going to come crashing down this year, they're not. That's the loose translation.
Last year, a lot of people were speculating that rates are going to be lowered probably 4 to 6 times this year. And when I say a lot, I mean the heavyweights. I'm talking the guys that are the guys you go and read about, the Morgans, the Goldmans, the guys that are the experts, right? Okay, everybody's like, oh my God, it's going to go down. It's going to be great. It's going to be this. It's going to be that. And then all of a sudden, no. Another month. No. Inflation's not dropping. Inflation went up 0.5 point. So now all of this is continuing the way it is to where we're at today.
When you look at all that, it's even a potential mild recession the second half of this year.
Mild recession. So they won't announce that, obviously, but U.S. crude oil falls below $85 as traders discount Iran-Israel war at risk that we have. So direct Iran-Israel war could spike oil by $30 to $40. You know who says? Bank of America says. Through 2025, and Brent potentially reaching $130 and U.S. crude oil soaring to $123 if Iranian crude suppliers are disrupted by up to 1.5 million barrels per day. You have inflation, that's one thing. You have interest rates, that's one thing. You have unemployment, that's one thing. You have oil, gas prices, that's one thing.
All those first things you mentioned is like the flu. If oil moves like that, it's cancer on the economy.
Tell me why.
Because oil affects everything. Oil affects fuel, just transporting goods back and forth. And by the way, the U.S. consumer is so much in debt right now, we have a freight recession going on where the amount of freight being transported around is down. You have that. So if oil goes up, air travel goes up immediately. Energy costs, just basic energy costs for your car goes up. Plastics go up. Plastic starts in a barrel of oil. Freight goes up. Oil affects everything. It's like the bad domino to fall in an economy. And by the way, they're saying, oh, it's under 85. The peak a year ago was 93.95. So we're all the way back up within $8 of last year's peak where we were panicking and Joe Biden opened the Strategic Petroleum Reserve to take excess oil out there to kind of help the price. I mean, we're within shouting distance of this. The economy is not nearly as good as it seems. United States oil extraction need about a $60 a barrel to make a buck. 60, 65. The oil sands in North Dakota and Alberta, they need about $55. It's more expensive to get the oil out of the shale as opposed to just plugging a hole in the ground in the Gulf of Mexico or in West Texas. So United States is a very happy place if oil just sits right there at 60. So you think, well, 85 to 60 is not too much. That's 25% more. I mean, you think 25%, that's bad inflation. And if it hits on $100 or 120, that's exactly double. 65 is a happy place.
Should we expect any stability from any of this anytime soon, or is it just like, get used to the chaos?
I think we need the Middle East to calm the F down. That will settle the oil market.
So check this out. This is the petroleum and other liquids. This is specifically oil, right? U.S. crude oil, early 70s to today. These companies need to make profit, right? This should give the average person a sense of what could happen. July 2022 gas prices in Americas. You're looking at $4.94, $4.99 peak. That's the national average. Not California, $4.99 peak national average.
$5.
Yeah. So what is the national average right now? $3.64. Yep. So let's just say $4.99, $1.36 more. What's a $1.36 on $3.64? 37%. If this thing all of a sudden today goes from where it's at to 125 a barrel, gas prices national average will be 550. So gas prices could go to 750 in California for regular, not premium. It'd be $8 for premium if this thing gets 125 bucks. That's what you need to know. Some people, go on dates on Ubers. Can you imagine, now you have to cut down your 2 days to 1 day a week? Catastrophic for Ubers, the Lyfts, all these different kind of things that takes place. But that's what this means, basic math, what it could affect. And by the way, this is not just going to affect this Uber, food, everything's going to be going up. And this is the one thing that people will directly feel. This number they'll feel.
Let me translate even further. That means to fill your tank with gas, the average fill up I've read is 12.5 gallons. At that price, you're looking at $100.
The U.S. freight recession keeps getting deeper. J.P. Hunt, a leading freight company, experiences a significant decline in stock value following disappointing first quarter earnings, with profits plummeting by $70.3 million compared to the previous year and revenue dropping by $2.94 billion. Weak trucking volume and sluggish demands contribute to J.P. Hunt's struggle, reflecting broader challenges in the freight market. Demand remains weak. Pricing is remaining at really historic low levels. What's going on here?
I'll give you 3 data points. Our government is telling us the economy is fine. Consumers have $1.1 trillion in credit card debt. The economy is fine. Buy now, pay later. They're delinquent on buy now, pay later. The consumer is fine. So guess what? The consumer is not buying. Consumer purchases are dropping, and therefore there's a lack of demand for freight services to truck all that stuff around. Now you've got freight at historic lows. So what's happening to the income of those truck drivers? It's dropping. This is bad. So the freight recession is basically telling us that there's not demand to be transporting stuff around the United States. Let's translate that. Why isn't there demand? Because the consumer is more tapped out, but the economy is fine. And look at the jobs report. Oh, wait, those are a bunch of part-time jobs people are getting, because for every job that was on the job report, we lost 1.2 full-time jobs. The freight recession is you saying, I'm fine, I'm fine, I'm fine, and your mom puts a thermometer in your mouth and says, you have a fever 103, you shouldn't go to school today.
By the way, transportation as an industry, we had one of our clients that we're consulting for, guys doing 40 million a year, he's down 70% due to not getting loads. And I said, why are you not getting loads? Then another guy jumps in who's part of this mastermind. He says, yeah, we're experiencing, whether it's on the load side where you receive loads to go, whether it's you own trucks. Right now, guys are selling their trucks because their trucks are not moving. The only way trucks make you money is when they're moving. If they're not moving, they're sitting there like, I don't even know why I'm making these payments. Here's a few things that you have to keep in mind. No matter what business you're in, you have to understand the ambition of your opponent and never downplay the ambition of your opponent. Okay, so guess what? Russia is ambitious. And what's their ambition? Leave us alone. We want to be a superpower. We want to be somebody that you cannot be messing around with. And we want the respect. Russia's got how many nuclear warheads? They got plenty of them. You can put the ranking and kind of see this. China. What's China's ambition? China's ambition is clear. They want to be the biggest superpower in the world. Great. What's Iran's ambition? Is it ambition, or is Iran driven by hatred? What is Iran driven by? Is Iran driven by selling their faith to the world? Like, is Russia driven by selling their religion to the world?
No.
Russia is driven by selling their power and imposing their power and their history to the world.
True.
Is China driven by selling Buddhism? So what's China's trying to do? They're just trying to tell you, we're better at strategy than you, and we're going to be better generals than you to take over, right? So the ambition there is economically to say, we're going to be a superpower, right? Here's the article from New York Post. Sex workers complain sales are down as inflation continues to pound the economy.
And it's getting even worse. Inflation has been pounding the economy, and sex workers are saying it's more expensive for them as well.
Let me go into the inflation story here. So high inflation is costing Americans an extra $1,000 a month, $1,000 a month. This is from Fox Business. Americans are facing significant financial strain due to high inflation, with households needing to pay an extra $227 a month compared to a year ago, totaling $1,069 more than 3 years ago. Financial pressures on households, especially low-income earners, housing and gasoline costs were primary drivers of inflation, and rents up 5.7% from previous year, and gasoline prices up 1.7% during the month. Food prices also saw a 0.1 increase, contributing to a 1.2% rise from previous year and a staggering 21% increase since January of 2021. So that means if you were making $100,000 a year in 2021, you need to make $121,000 a year to be able to maintain the same exact lifestyle just in that period, which is 3 years.
Let's do fun with math again, but this is no fun for the consumer. $1,069, I did the calculation in most U.S. states, leaving out New York and California, because this would be even worse, is $12,500 pre-tax. So 3 years ago to now, you would need $12,500 a year, and then you do tax on it, it's almost $15,000. That means if you didn't get a $15,000 raise, so you can have that $1,069 a month, then you are behind. So all the headlines about, oh, the stock market's up, Magnificent Seven, S&P, oh, this is good, inflation's down. The long-term effect on people has been catastrophic. Right now, this inflation, this is real. And recently, they were having headlines. People saw PPI. It stands for Producer Price Index. So let's just think, Producer Price Index. Producers are people that make things, like Nike that make shoes. And so what do they pay more for all of the fabric and everything that goes into a shoe in the cardboard box? That is the inflation hitting them. When producer prices go up, you can set your watch for 90 days later, those products go up. Basically, inflation continues to go up, so Americans are looking for second jobs, looking for side hustles, and are looking for ever more ways to see if they can trim the budget or save a few bucks or find lower cost alternatives in an economy that is biting them hard.
That is true. That's for sort of our economic indicators of discretionary spending.
What are we going to see with this article? I'm actually curious.
Yeah, well, if you look at the countries all around the world, the inflation is not just here in America. We know that that's sort of the obvious, but America actually has recovered pretty well based on the rest of the world. So here's some of the countries with the highest inflation at this point. Zimbabwe, I think it's like 500% ridiculous. So America, if you believe the numbers, is sitting at 3.7%. Okay, compared to the rest of the world. Here's China, somehow not even at 0%. Can't believe the data that comes out of China.
I feel like I just had a flashback to a week and a half ago. The cumulative inflation rate over the last 3 years is killing the American middle class. And you can look at it right now and say, is it good that inflation is down? Well, it's good that it's down, but it's not as low as it needs to be. And the cumulative effect over 3 years is pretty bad. People, save that money. You need more money to save the money. And these poor people are now $1,100 a month, a freaking month, 15 grand a year before taxes, worse off than they were 3 years ago. That's pretty harsh. It's good to look out there and say, wow, you know what? The inflation rate is down when I'm eating ramen noodles and I've got major U.S. companies suggesting I have cereal for frickin' dinner.
So Bill Ackman says, student loan forgiveness sounds great for borrowers overburdened with high interest rate debt that they cannot repay. The problem is that the subsidy appears to be principally to more affluent families at the cost of burdening those who didn't attend college or whose parents saved send their kids to schools. It should be illegal for a president to buy votes by transferring funds from certain citizens to others he believes are more likely to support him in an election. He's 100% right. There's a difference between you're talking about inflation isn't as bad as some people think it is. You know who's feeling it? Middle America is getting destroyed in America today due to pathetic policies that we have. The reason why it's rough, it's because they can't move that number with inflation. They keep talking about unemployment, and the unemployment numbers, Rob, the unemployment numbers that we hear about are a couple different things. The point is, we can sit there and talk about unemployment. They don't calculate people that don't want to go back into the workforce, and they calculate if a person has 3 jobs, they calculate it as 3 different people having a job. It's not 3 different people having a job. It's one person has 2 or 3 jobs. So people are desperately having to work multiple jobs to make ends meet today. And you know who feels that? Middle America does. You know who doesn't feel that? People that are doing okay financially. So the policies are finally hitting the people that are feeling it, and they're making noise. By the way, earlier we asked the questions of who this Iran-Israel war is going to impact the most. Gas prices.
Yep.
If it goes to 5, again. If it goes to 6, again. If it hits the 7, 8, 9, 10 number over the next few months, you already know what's going to be happening if that takes place. And by the way, this is happening. How much oil are we personally producing right now being self-sustaining?
We do know this. If there is a major disruption, trying to get the price of gas down, the Strategic Petroleum Reserve, which is reserved for war times and crises, so America's got energy at the time of crisis. And Biden flooded the market with it to put excess supply out there to bring the price of gas down for the sake of presidential approval ratings. Yes, that's what he did. And right now, what we're using per day, 20 million barrels, and we don't have a Strategic Petroleum Reserve. So worldwide supplies get disrupted, our own production gets impacted, Pat. Guess what happens to the price of a gallon of gas? It will hit $5 in less than a week.
Wow, that's pretty wild. So guess what, Middle America? Brace for impact. High gas prices are around the corner for you.
Gas prices are obviously a major part of people's expenses when it comes to their car. I always say there's the big 3 expenses that you have: your housing, your transportation, your food and beverage. But back to the larger conversation we're having about the economy, this is on multiple people. It's on, obviously, the administration, the president, Treasury Secretary Janet Yellen. Some of this is on Jerome Powell. We've said that he's done a pretty good job, but I'm a fan of personal responsibility and personal finance. At what point is it up to the person to make better decisions with their life? The common theme, 2/3 of Americans are living paycheck to paycheck. So 100% I want to see inflation come down. We're at, 3.7%? CPI is a little bit higher. We'd love to see it down to 2%. We'd love to see it. But the reality is that most Americans need to focus on what's going on in their house, not on what's going on in the White House.
That is true. Inflation isn't moving. And a lot of people right now, most of the guys are talking about, Pat, I've been in transportation. I experienced 70% dip. I've been in a mortgage business. I experienced 80% dip. When is this thing going to turn around with interest rates? what's going to happen? And even in the market right now, I made an offer on a building. The other day, guys like, what kind of an offer are you wanting to make on this building? We made a $60 million offer. And I said, cash, we'll close in, whatever. He says, really? Yes. So send us the documents. I want you to send me your net operating income. Like, yeah, this is how much we're doing. Really? Send it to us. Well, if that's what you're doing, that's my offer. Well, first show me you got the cash. I send him the cash. Then he sends me back and he says, well, our net operating income was what, 40% less than what he quoted us. We got even lower and lower. Anyways, 40% less than what he quoted us. But you know why he was interested in talking to us? Because anybody else that wants to make an offer at a number like that, guess what they're looking at? They're looking at interest rates. And who the hell wants to go get a $60 million loan right now at 8%, 7%, and the down payment 40%, 35%? It's a very different economy. So middle America's feeling it. Yes, it doesn't necessarily affect the people that made better choices because they have cash. But a lot of people right now are feeling the hit that's going on. And it's mainly the people that you and I don't want to be going through challenging times. Middle. We want middle. And middle is feeling it.
Exactly right. We're creeping back up to the peak that we had. So you can look at the price of a barrel of oil and go to what Pat said earlier, and that is a forecast of where inflation's going to go, because all the things he talked about, from getting the plane ticket to go see your mom, the shipping costs of the truck that just dropped off all that stuff with Amazon Prime, and that's where it's going. And uncertainty in the Middle East, there was a sigh of relief that it didn't break into wide open conflict, but the price of oil is going back up.
Right now, premium is $5.82 in California, guys. Diesel is $5.44 and regular is $5.46. Hawaii is $4.75. You got Washington, Nevada, Oregon, Alaska, Arizona, Illinois, Utah, Idaho. Let's see who's got the lowest. Colorado, 3. Mississippi, Louisiana, Arkansas, Oklahoma, Texas, 320. You wonder why people are moving to those states? You know what kind of growth right now Texas is getting with people that are moving there? Florida right there, 351. New York is also 350, which is not bad. Guys, by the way, New York against California. Look at what New York is right there, 353. $2 more
Of tax.
Bro, it's tax that he's charging the people. Think about this. The moral of the story here is this. If this thing climbs the way it is, America is going to be very, very upset the next few months. If this continues, it's going to be a little bit tough for the guy that's currently in office, for the guy that's currently in office, for the guy that's